gives me great pleasure to introduce Keith Neumeyer, who is President and CEO of First Majestic Silver Corp. First Majestic is an operator focused on Mexico, where it operates a number of mines within the region and is one of the most silver-weighted silver producers amongst its peers. Keith, I'm going to give you the opportunity to present. I'm going to step back and thank you very much from Red Cloud for being here and contributing to this silver webinar.
Well, thanks, Andrew, and thanks for the invitation and the opportunity for First Majestic to do the presentation today. I'm not sure if you can see me, but hopefully you can at least see the presentation, which I'm told all of you can see. So I've only got 20 minutes for this. This normally takes about 30 plus minutes to go through a couple silver basics. The miners are producing about 800 million ounces of silver last year. This year it's going to be substantially less due to several mines being offline. The total production for the year is currently unknown, but sometime in early 2021 we'll know what the numbers actually look like, but obviously it's going to be much lower than the previous year. Demand is pretty robust, pretty well, particularly in the retail silver space and institutional silver space. Industrial demand seems to be fairly stable as far as we can tell so far. The most interesting point on here is really the mining ratio. As an industry, we're only mining for every 1 ounce of gold, 8 ounces of silver, which is pretty shocking considering where the silver gold ratio is currently trading at. Obviously quite a disconnect between the actual supply demand fundamentals of the metal versus what the markets actually price it at. So moving along, so solar cars electric cars use 3 times more silver than normal fuel combustion cars. Solar panels, the numbers aren't out yet for 2020, but these are estimated numbers. Almost 10% of the silver is consumed in this one industry alone, solar panels. Lots of gadgets we take for granted. I coined the phrase strategic metal years ago, about a decade ago, and really I look at silver as a very strategic metal for all the reasons we want to do as a human race to improve our lifestyle and our electrical grid globally. So we need a lot more silver coming out of the ground to do all the things we need to do, and we need much higher prices in order for us as an industry to supply the needs of the human race. All of you don't need to cover this, all of you know. Okay, going into the company, as Andrew said, 60% of our revenues from the sale of silver, which puts us in a pretty unique position, 40% gold. We only produce 2 metals, and nicely, all this metal we produce is in the form of doré bars, other than concentrates, which also helps us a lot when it comes to costs. We have 3 producing mines. All our assets are in Mexico. We've got an enormous land package in the country of Mexico, and I'll cover that as we get through this in the next few minutes. Market cap is somewhere around 3 billion, a little bit shy of 3 billion. We've got a pretty healthy treasury, and all the stats are there. You can read for yourself. Wheaton's a big shareholder of ours. Our top shareholders are listed there, mostly ETFs. Just to do with the last couple of years with the explosion of ETFs. Of course, the analysts are there that cover us. So going to the assets, we're all in Mexico. We've been in Mexico for 18 years. I put this coming together in 2002, and I hit the ground pretty hard acquiring assets. I think we've acquired one of the most unique portfolios of assets in the silver space. We did have in 2017, we had actually 7 mines operating. We currently have 3 mines operating. We did shut down the San Martin and La Fruta del Toro mines in the last year, just due to their size. As the business grew, and the internal rate of return just made so much sense to put our money into the bigger assets. Some of the legacy smaller assets got somewhat ignored, and over time they have been slowly shut down. So La Guitarra was another one that we shut down back in 2017, and we're looking at potentially reopening them. We don't know. We're getting interest from a number of the juniors right now looking to buy them, and it's hard to say really what this portfolio is going to look like a year from now or 2 years from now, but the focus is definitely on the top 3 mines. we're actually producing as much silver today as we did a couple of years ago with all 7 mines up and running. Our profitability is much higher as a result of those decisions. The 2020 estimates, and just as a result of the reduction in production from COVID-19, we did come out with renewed guidance in early July. So there's about 1.5 million ounces that we expect we will not be producing in 2020, which was originally projected we would. We're hoping to make them up. We don't know. It's going to be a tough thing to do to make up the ounces we lost, but we are spending efforts on doing that. So we hope to come in a little bit better than this number, but we'll see how time evolves over the next few quarters. This is the guidance that we put out in early July, around 22 million ounces of silver equivalent. It's all written there for, as you can see. Decent cash costs, all-in sustaining costs have come down from our original guidance, which is really nice to see. And we're always trying to beat these numbers, but these are our most updated numbers that we put out. One interesting thing you should note on this slide is that the metal price assumptions used are $17 silver and $1,700 gold, and with the metal prices doing what they're doing, we're expecting these numbers to probably look a little bit better. And this was the this is just our H2 guidance, broken down, compared to the full year, which is including the first part of the year, and then of course with the combined H1 and H2 numbers are there. So looking at our capital investments, we have reduced this. We came in with a pretty aggressive budget for 2020. We had planned on spending about $171 million. A lot of that was in expansionary capital, new technologies, and so on. We've now brought some of these programs back into the budget, but we have reduced it due to the current economic environment, the reduced revenues due to the slightly reduced production. So we're spending a little bit less money. It's taking some time to get the exploration back up and running. We've got 9 rigs currently active, and we hope to have another about 8 or 9 rigs active within the next couple of months. So we're trying to resume exploration, but the big construction projects, the one at San Dimas and the one at Santa Elena, are starting up again. So this is what the reserves look like, and interestingly enough, you see on the bottom gray bar here, grades have been increasing over time. So as we increased our drilling programs, Santa Elena and San Dimas have contributed substantial reserves and resources to our portfolio, and both of those 2 mines have very, very good grades, and that's helped the overall portfolio from a grade perspective, and of course from a reserve perspective as well. So looking at San Dimas, this mine we've had in our portfolio only for a short period of time. March 2018, we acquired it. It's been a fantastic mine for us. You could see all the numbers yourself. This mine has been in production for over a couple hundred years, and it'll be in production for a few hundred years in the future as far as we're concerned. There's a big investment going on here. There's a 3-year investment, including the expansion of the hydroelectric dam to get the power here on hydroelectric up to 100% from the current 50%. The Cheltita mine is now just up and running, which we're pretty excited about. And you can see the 2 pictures on the right-hand side here. That's the tunnel that we've been rehabilitating and all through 2019, and now it's in production today. It's not complete. There's still about another, I think about 1 kilometer of development that we're still going to do to get even deeper into the mine, but this is going to be a good contributor to the mill over the next several years, and it's very close to the mill as well, which we're pretty happy to bring back into production. And this is just a list of technologies, automation processes. We've been automating our mills for quite some time, in an effort to improve recoveries and improve efficiencies and reduce costs. This mill is old, dilapidated. We cleaned it up a lot, but it really needs to have a major retrofit. And this is part of the investment that started in early 2020 after planning that took place throughout most of 2019. And as I said, it's a 3-year investment project to upgrade this mill and the infrastructure for this operation. And some other photos. There's the dam that we're going to be expanding. That's currently supplying about 50% of the power. We want to get it up to 100%. You see on the right-hand side of this slide, there's that big HIG mill. That's a picture of Santa Elena, actually. That's our first ever HIG mill installed in our business. It's the first one currently operating in all of Latin America. There's only a handful of them in the world, and they're just an amazing, amazing machine. Going on to Encantada, this mine has been a big producer of metal for a long time for us. We've really seen it improve dramatically over the last year. We've hit some very nice high grade areas in the mine over the last 12 months, and also we've made some improvements at the mill, which took the recoveries up to kind of a historic 50 to 60%, which is actually not particularly good to the current 70 to 80% recovery. So that change alone has really created a game changer for this operation, and combining that with higher grades, it's actually worked out pretty well for us. So we're expecting to do additional investments here throughout the next 18 months. Got slightly slowed down because of the COVID situation, but we're getting all the investment programs back up and running. So we're expecting 2021 and 2022 to be pretty good years for this mine. It's our third largest mine in our portfolio, as you probably know. Santa Elena, our second largest mine, around 6 million ounces approximately. Good gold grades, decent silver grades, highly profitable operation. There's been a lot of focus here over the last 12 to 18 months on investment in innovation, the installation of the HIG mill, which I already mentioned, which is a huge driver for this operation. Recoveries, bumped up by 5-6% as a result of that installation, and that same technology is being added to all our current operating mines. So this mine here, you see, this is the Ermitaño project, and I was hoping, let me see if the map is on the next slide here. Just okay, here it is here. So you see that red dot. That red dot was discovered back in 2017 or 2016, as it says on the slide. We've been drilling it ever since. We've started developing into that. It's only 4 kilometers away from where the current mill is. And the grades here, as you can see, are pretty good. And this operation is a blending operation. So what we've been doing here since we've owned it, we've been blending about 60% of the mine ore with 40% of the heaps. And these heaps were there as a result of the original open pit mine that the predecessor was operating. So we've been reprocessing through this mill at a tune of about 3,000 tons a day, 60% mine, 40% heaps. And this ore body here, as you can see, the developments is well underway. And we're expecting to start feeding this mill this ore by mid-2021, which is a little bit delayed. We're hoping to see it in early 2021, but as a result of the pandemic. But we're back working again, and we're now expecting to see throughput start going through the mill, and that's going to displace the current feed that's coming from the heap pads. And this grade or this ore is 10 times higher grade than the current feed from the heaps, which is pretty interesting. So we're going to have the same throughput of 3,000 tons a day, but we're going to see a much higher grade, head grade going through the mill. So despite the throughput remaining the same, we're going to see more metal being produced, and of course that will result in lower costs, which we're pretty excited about. And from an exploration perspective, many of you probably heard of Las Chipas, which is the Silvercrest property. That's that red dot in the white square above the dark green square called Los Hernandez, and then El Gachi. We own all that land. We actually own everything in color here. This is a huge land package, 100,000 hectares, 200,000 acres of land. Now we had a drill rig at Los Hernandez. It's just getting put back there as we speak. We're going to have a couple of rigs up in Los Hernandez. We're planning on having a rig or two up at El Gachi as well. We'll get our rigs back operating in the blue area, the Ermitaño area, and of course the main pink area where the mine and mill are currently sitting. So all the drill programs will resume, and this is an extremely prolific part of Mexico. We're very excited about this property, and we expect this mill is going to have tons and tons of feed for many years into the future as a result of the prolific nature of this particular property. Going into technology, I'm not watching my time, so I don't know how much time I have left, but so research and development is really a core driver for us. We've been, for the last 6 years, we've really treated this part of our business as a key component of our success. And over this period of time, we've actually had our costs reduced by something in the order of about 50% as a result of technologies. And we're very proud of that. And this is one of the key components that we adopted. I've already covered it to some degree, but this is the picture on the left here. I took myself in Austria. I flew over there in August of 2018. And this arrived on site in January of 2019. We had it up and running by July 2019. And in our estimates, all we needed was an extra 2% gold and 2% silver to make this installation economic. And we saw a huge spike in recoveries, as you can see here, as a result of the installation of this technology. And we actually think it can get better than this. It's created a bottleneck in the filtration system because of the fine grind nature of this machine, which is obviously a good problem to have. In part of our 2020 budget, the entire filtration system is being upgraded, and that'll be completed by early to mid 2021. And you're going to see, or at least we're figuring in our internal estimates, we feel that these recoveries will improve even more where they currently are with the upgrade in the filtration system. So look for that. And these technologies are being added to San Dimas as well. So San Dimas will get the same type of benefit that Santa Elena is now receiving. And it's some of the things we've done over the last 6 years, just, technologies again, and this is a big deal. Going back to 2014, we had average 65 to 70%, just shy, in the form of recoveries, and now we're pushing 90%. And it's a big thing for us and big thing for the mining sector as a whole. And some catalysts, the LNG at Santa Elena is a big deal. The Santa Elena is the last mine in our portfolio that actually requires diesel for operations. So we're reducing the carbon footprint there. It's a big deal for us. And so we started construction of that LNG facility before the COVID situation occurred. Crews are now arriving back on site to get this project back up and running. You can see the LNG set we put in Encantada a few years ago. We converted that over from diesel, and it's worked out quite well for us. So Santa Elena will be now converted over to LNG. We had hoped it was going to be done by the end of 2020, but that is now delayed. We're expecting by early 2021 it'll be completed, but it's going to save millions of dollars in diesel, and it's going to be a great thing for that operation, and obviously a great thing for the environment. Another comment regarding the San Dimas Hig, the government allowed us to deliver it through the COVID. This Hig mill went through the Panama Canal. It arrived in Mazatlan, and we had to get special permits because it's super wide load to take this on the highways all the way to the San Dimas mine. And fortunately, they were nice enough to give us the permit to get it to site, and there was no one on the highways, so it was done in a very, very safe way. And it was great because it was done during normal periods. You'd have to block roads and so on and so forth. So it worked out really good for us. And now it's on site, and construction has now resumed. And to Andrew's point about our purity, this is a BMO slide, but it just goes to show you, where we are in the entire space. And our breakdown of metals, our performance over the last 10 years. Our short position now, of course, we expect is probably lower than this number now. We haven't got the new updated number, but I would assume the latest share price move is somewhat to do with this short position. And that's really it. That's the balance of the end of my presentation.
Thanks very much, Keith. We've got a couple of minutes for questions. So
okay.
I thought I would lead off with the fact that you've made a couple of very successful what I would say is are transformational acquisitions over the last couple of years, bringing Santa Elena and then San Dimas into the portfolio, and you've really moved that portfolio to larger operations. When you think about the business, you know, what are your objectives when you think about potential acquisitions? What kind of project is of interest to First Majestic these days?
You know, it's the silver space is a lot smaller than people think it is. You know, we could quite honestly go buy a couple of gold mines and grow the business, but I'm reluctant to do that. I'm trying to, you know, find, you know, more access to silver, and you know, it's limited from a jurisdictional point of view. So that's somewhat restrictive and challenging. You know, and also from a size perspective, you know, when you look at the last couple acquisitions we did, you know, the Santa Elena added, you know, 5-6 million ounces of silver equivalent production, 50% gold, 50% silver. San Dimas added, you know, 13 million silver equivalent ounces, you know, half and half as well. You know, we're looking for chunky assets like that, and it's you know, whether they're in the development stage or whether they're already in production, you know, it's dependent on the asset, but you know, that's the challenge that we currently have.
And when you think about the operations that are on care and maintenance right now, which of the three of those operations might you consider restarting at current silver prices?
Yeah, the Encantada is quite an interesting asset. You know, it never really reached its you know, its potential. You know, we bought that asset, you know, not quite at the peak of the market, but you know, we paid a fairly high price for it because of our geological you know, understanding of the area and our expectations of, you know, successful geological programs or drilling programs. And you know, the market collapsed, you know, shortly after we bought it, and we never got around to making the investment there. You know, we had planned on rebuilding the mill, putting a whole brand new modern mill there, and spending a substantial amount of money on exploration, and none of that happened. So, you know, it made money for a few years, and then when the metal prices suffered as they did, it started losing money, and we made the tough decision to shut it down. So we've had discussions internally about potentially reopening that mine. The others are base metal mines, and La Prie and Del Toro produce lead and zinc cons. And I'm less interested in lead and zinc at this particular time. So, you know, if I was to pick one in the portfolio, that would be the one.
All right, that's encouraging, because there's a lot of exploration potential at La Guitarra, and that you pointed out hasn't been fully evaluated yet.
Mm-hmm. Yeah, our geos like it. It's old historic mining district. It was owned by Luzmin, which is an old Mexican company, up until, you know, the turn of the century, and it's been in a couple of juniors' hands and never really been developed. And then we picked it up with a lot of expectations and a lot of plans, and we just never executed our plans, unfortunately.
Great, Keith. Thank you very much for your time, and thank you very much for the update on First Majestic.
Oh, great, Andrew. Nice chatting today.